In this video, I'm going to teach you a very simple MACD trading strategy that can give good results if you practice it and master it. So let's start. Let me show you MT5. Now, this is pound dollar H8 chart. This is the slow SMA moving average, and this is the fast moving average. This is the MACD. MACD is moving average, convergence, divergence. If you use the MACD provided by MT5, you see it's just very plain. Here's a signal line and these are histogram bars. You never know when the MACD is increasing and decreasing. So I changed this MACD and added that layer of color to it. Now the same MACD is this. When the MACD, which is basically the difference between two moving averages, one slow moving average and one fast moving average. For example, here you see the distance is short. Here the distance is increasing. So when the distance between moving averages increase, there we have got a green line. And when the distance between the moving average decreases, we have got a red line. How do we define the trend? We define the trend on a time frame by the color of the MACD. If a MACD color is red, we are going to say that the trend is down. And if the color of the MACD is green, we are going to say that the trend is up. Now look here. There's a engulfing pattern, bearish engulfing pattern. If you had made an entry over here, it would have been a very nice 200 pip movement you could have captured. But you can only know about the trend when it ends. At this point, we have no idea where the trend is going to go. It can go up, it can go down. We have no idea. So we use these indicators like this MACD, RSI, stochastics. These indicators give us some clue where the trend is heading. See, here we had a bearish candle, and the MACD was down. We could have taken that trade and we could have made 200 pips easily. But here, again, look here, we have got a very bullish candle, very bearish candle, where we have a very bearish candle. Trend is down. If we would have taken a trade, the stop loss would have been hit. Here also, we have a bearish candle. If we had taken the trade, trend is down. Again, stop loss would have been hit. So there's nothing foolproof in trading. Always, you'll win some trades, you will lose some trades. You will be always guessing. So how do we guess? We guess using indicators, support and resistance levels. Combine those indicators with support and resistance level and make an educated guess. This is how we trade. And we use risk management. Risk management is the key to trading success. We risk small and we try to catch a big movement. Let me explain this thing. Risk over reward is very important in a trade. Risk is your stop loss. Reward is your take profit. For example, if you are risking 50 pips and if you want to make 50 pips, your risk reward is just 1:1. Now suppose you are risking 20 pips and your reward is 100 pips. So your risk or reward is 20 or 100 or 1 or 5. The good risk reward means if you win a trade, you will make 100 pips. If you lose a trade, you will lose 20 pips. So you will have to lose 5 trades in a row to lose 100 pips. And if you win one trade, you make 100 pips. So you can easily recover your loss. So the better your risk reward is, the better will be your trading strategy. So what I do is I go for trades that have risk reward of 1:10 at least. Means if I risk 10 pips, I should make 100 pips. If I risk 20 pips, I should make 200 pips. So risk is also your entry. There are two very important parts of a trade, entry and exit. There are many people who say entry is not important. These are those people who trade with wide stop losses. I don't trade with a wide stop loss. I trade with a very small stop loss. I have a hypothesis. I look at the chart. I observe the chart. I believe that price is going to go down. This is my hypothesis. And in case if the hypothesis is wrong, the stop loss will get hit and I'll be out of the trade. So I always use a very small stop loss that ensures that I don't lose much. Ultimately, it's capital preservation. You don't have to overtrade. So there are two very important parts in a trade, entry and exit. Entry is your risk and exit is your reward. When you open a trade, the reward is hypothetical. Maybe price doesn't go up 100 pips. Maybe it just goes up 50 pips and comes back. So you have no idea. But if you have a consistent approach and if you develop a method that has a good risk reward, you'll see over time you'll be making more pips and you'll be losing less pips. So always remember there are two parts to a trade, entry also known as risk and exit also known as reward. Both are important. Means you make a trade 20 pips and you close that trade after a 100 pip profit, you have got a 1:5 risk was very good. But suppose the price went up to 200 pips, you just left 100 pips on the table. If you had let the trade continue, you could have made 200 pips and your risk reward would have been 1:10. So that's why in trading we say let the winners run and cut the losers short. I have coded this MACD color indicator in MT5. See? This is that MACD main color, signal color. I will provide a link in the description. You can download it. I'll provide both MT5 and MT4 versions. This is that MT5 version. This is on calculate function, which calculates on each tick. Now this is that indicator. So you can download this MACD color. This is basically the same indicator MACD that is provided by MT5. I've just added a layer of color on it. So when the MACD increases, the bar becomes green, and when the MACD decreases, the bar becomes red. Let's get back to our trading strategy. The crux of this trading strategy is we will find the direction of the market on higher time frame like D1, daily, or H12. Here, see, at this point, this trend is down. Since the trend is down, we will only open short trades. Here the trend was up, MACD was green, we would only open long trades. So we use higher time frames to get the direction. But we make the entry and exit decisions using lower time frames like H8, H6, H12. Now here you see trend was down. The last week it was FOMC meeting. Very important. I think the Federal Reserve plans to increase the interest rate on H12 also. The trend is down. Now, we use concept of support and resistance. H12 also provides good support resistance level. And D1 also provides good support resistance level. And H8 also provides good support resistance levels. Each bar is giving you some clue about support and resistance. H6 also. Now it's all on yourself that how you understand that clue. Sometimes you'll be wrong. If you are wrong, how do you avoid big loss? By using small stop loss. So here, see, this was the candle before. This is that candle on the day of FOMC, one day before the FOMC meeting. And here also. Now you have to make the decision. This is an important candle. This is that resistance level, high of this thing, 1.35267. If you enter a pending order with 10 pip stop loss, you could have easily captured this move. The price went 1.35238. It could have easily been filled, and it went down 1.33570. So roughly like 150 pips move with a 10 pip stop loss. It would have been given you 1:15. Very good risk to reward. Now, with practice, you will understand how to identify good trading opportunities using MACD and concept of support and resistance. Let me show you this. This is that resistance. See, price would never break this resistance. You can be wrong also, here also. See, you could have used this thing as a support and resistance level, right? And you see price went up and then went down. So if you had used 10 pip stop with this level as a stop loss, the stop loss would have been hit. But if you had used this level, your stop loss would not have been hit. So it may take some experience. And with some practice, you will be able to master the strategy. You don't need a very high win rate with this strategy because we are looking for very good risk reward ratios. For example, 1:10, 1:15, 1:20. So you just need 50% win rate. If you know about the turtle trading system, you'll be surprised win rate was only 30%, but it made millionaires. Richard Dennis was the inventor of that turtle. So it doesn't work now because markets have changed. But basic concept of the turtle trading system was also this thing that with the small stop loss, you try to catch a big move. And this concept is valid even today, and it will always be valid. Our strategy should capture the big move with a small stop loss. If you can do it, you don't need a very high win rate. 50%, even 40% will make you good pips. For example, if your stop loss is 10 pips and your average take profit is 100 pips, your win rate is 40%. That means you win only 4 trades and total of 10 trades. 4 means 400 pips, and losing 6 trades means 60 pips. So you made 340 pips. This is how you want to develop your trading strategy. MACD gives you just the direction. Keep this in mind. It's very important for you to understand. MACD only gives you the direction. Entry and exit, you use for entry and exit the concept of support and resistance. Every bar is giving you a potential support and resistance level. For example, this bar giving you a resistance level 1.37476 and giving you a support level of 1.36965. This bar tries to break the resistance, but then it breaks the support. Every bar is giving you a support and resistance level. The high and low of higher time frame bars are very important. High and low of these small time frame bars like H1, M30 are not important. They easily get broken. But high and low of H6, H8, H12, D1, W1, they are important. They give you very important clues. And we use these high and lows in our trading strategy to make the entry and exit decisions. Once you have trading on D1 and H12, Depends on the currency pair. For example, pound dollar 150 pip take profit is a very good take profit target. But if you are trading on New Zealand dollar or Aussie dollar, Kiwi dollar, Aussie dollar, here 100 pips take profit, 70 pips is a good target. For euro dollar also 100 pips is a good target. But on pound dollar you can have 150 pips target. Pound yen also you can have 100 pips 150 pips target. 200 pips target. Look here. This was a good 156, 157. See? This was H8. Trend is down. Trend is down. So we could use H8. And this has a resistance level 215. 157, very good target. Always use the KISS principle, keep it simple. Keep your trading strategy very simple. You don't need a platinum coated algorithmic trading strategy to succeed. Practice, make your life easy. Once I open a trade and I close the computer, don't look at that chart, and after let's say 24 hours again check that chart, because I'm trading on D1, H12, H8, so I want at least 3-4 candles to form on H8 or H6. Sometimes the stop loss will get hit, sometimes the take profit will get hit and you'll have a good trade, and sometimes you'll have a profit maybe somewhere in between. So it works like that. I hope you liked my video.